Let me ask you a question. How many times has one single trade completely ruined your day? One loss, and suddenly you feel frustrated, angry, doubtful. You start questioning your strategy. You start questioning yourself. And now, let me ask you something more uncomfortable. If one trade has that much power over your emotions, are you really trading? Or are you just emotionally gambling with charts? Because here's the truth. Most traders don't want to hear. If you care deeply about individual trades, you will never be consistently profitable. Not because your strategy is bad, not because the market is against you, but because your mindset is fundamentally incompatible with trading. And today, I want to explain exactly why. Most traders don't lose money because of bad strategies. They lose money because they bring the wrong mental model into trading. From the moment you were a child, you were conditioned to believe something very simple. If you do things correctly, you should get a positive result. And if you get a negative result, it means you did something wrong. This belief is deeply ingrained. You see it in school, you see it at work, you see it in almost every area of life. Study harder, get better grades. Work harder, get promoted. Make fewer mistakes, get better outcomes. So when you enter trading, you naturally bring this belief with you. You believe that a good analysis should lead to a winning trade. A losing trade means poor decision-making. Consistency means being right more often. And that assumption feels logical. But in trading, that assumption is fundamentally false. Here is the mistake most traders never realize they're making. They treat trading outcomes as feedback about their competence. One winning trade, confidence goes up. One losing trade, confidence collapses. Slowly, without noticing, each trade becomes more than just a trade. It becomes proof that you're good, or proof that you're not. And the moment that happens, your mind is no longer neutral. You are no longer executing rules. You are defending your self-image. That's when trading turns emotional. Let's be very clear about something. A single trade tells you almost nothing, not about your skill, your system, your future results. Yet most traders treat one trade as if it carries enormous meaning. Why? Because the human brain is addicted to immediate feedback. Your brain wants clarity. Am I right or wrong? Am I safe or in danger? Am I winning or losing? But the market refuses to give you that clarity in the short term. You can do everything right and still lose, and you can do everything wrong and still win. So when you judge yourself trade by trade, you are judging yourself using noise, not information. And noise is emotionally expensive. Here's the exact moment most traders cross the line. It's not when they lose money, it's when they think, I need this trade to work. That sentence seems harmless, but psychologically it changes everything. Now the trade is no longer a statistical event, one data point in a large sample. It becomes a test, a verdict, a judgment on you as a trader. And once a trade carries that emotional weight, your behavior changes automatically. You start watching the chart differently. You feel every tick. You react instead of execute. At that point, discipline is no longer possible. Most traders stay stuck here for years, not because they don't learn strategies, not because they don't watch enough videos, not because they don't want to improve, but because they never change how they interpret outcomes. They keep asking the wrong question. They ask, why did this trade lose? When they should be asking, did I follow my rules exactly? As long as winning is good trader, losing mean bad trader. Every loss will feel like a personal failure, and no system can survive that level of emotional pressure. Here's a truth that is uncomfortable but necessary. If losing a trade ruins your mood, affects your confidence, makes you want to change your system, then the problem is not the market. The problem is that you are using the wrong scoring system. Trading is not scored per trade. It is scored over large samples. Until you accept that you will keep sabotaging yourself emotionally, even with a profitable system, before we go any further, you need to understand one critical thing. Your brain is not broken. You are not weak. You are not undisciplined. You are not bad at trading. You are simply human. And the human brain was never designed to operate in an environment like financial markets. For hundreds of thousands of years, your brain evolved to do three main things: avoid danger, seek certainty, react quickly to threats. That worked perfectly for survival. But trading flips all of that upside down. Your brain hates uncertainty. Uncertainty means potential danger, lack of control, no clear outcome. So when you place a trade, your brain immediately starts asking, is this safe? Am I right? How long until I know the result? But the market does not answer those questions. The market says, you will find out later. You might be right and still lose. You might be wrong and still win. This creates psychological tension, and the brain always tries to reduce tension, not by logic, but by action. That's why traders move stop losses, close trades early, enter trades they didn't plan, trade again immediately after a loss. They are not trying to make money. They are trying to feel relief. Short-term randomness feels offensive to the brain, because the brain wants cause and effect. I did X, so Y should happen. But in trading, X does not always lead to Y. Sometimes it leads to Z. Sometimes it leads to nothing at all. So when a good trade loses, the brain doesn't say, this is variance. It says, something is wrong. With me, with my decision, with my ability. That's when doubt creeps in. And once doubt enters, execution collapses. Here's the loop most traders live in. They take a trade, they watch every tick. They feel tension rising. They interfere with the trade. They get a random result. Then they tell themselves a story about it, and that story reinforces fear. After enough repetitions, the brain learns something dangerous. Trading equals emotional stress. So next time, fear appears before the trade even starts. That's why traders hesitate. That's why they miss setups. That's why they freeze. Not because they don't know what to do, but because their nervous system is already overloaded. Now here's where everything changes. Professional traders do not have better emotions. They don't feel less fear. They don't feel less uncertainty. They simply interpret trading differently, and interpretation changes behavior. A professional trader does not see a trade as an event. They see it as one sample inside a very large dataset. One trade is meaningless. 5 trades are still noise. Even 10 trades can lie to you. Only a large series tells the truth. That's why professionals don't ask, will this trade win? They ask, does this trade belong to my system? Once that question is answered, the outcome becomes irrelevant. For a professional trader, a losing trade is not a mistake. It's a business expense, just like paying rent, paying for data, paying for software, paying for internet. They don't emotionally react to expenses. They plan for them. Amateurs hope to avoid losses. Professionals assume losses will happen. That single assumption changes everything psychologically. Think about a casino. Casinos experience losing streaks. They experience bad days. They experience players getting lucky, but they never panic. Why? Because they trust the math over time. They know variance exists. Short-term outcomes are irrelevant. The edge plays out over thousands of events. Amateur traders think like gamblers. Professional traders think like casinos. Same market, same randomness. Completely different mindset. When you stop expecting any single trade to matter, something powerful happens. You stop watching every tick. You stop reacting emotionally. You stop interfering. Your nervous system calms down. Not because you don't care, but because there is nothing to protect anymore. No ego on the line, no identity at risk, no verdict waiting to be delivered, just execution. And execution is calm. Most traders understand this intellectually. very few internalize it emotionally. Because letting go of individual trades means letting go of the need to feel right. It means accepting you will be wrong often, you will lose regularly, and that's not a problem. That acceptance is the real milestone, not profitability, not win rate, not account size, but emotional neutrality. At this point, most traders say the same thing. I understand everything you're saying, but when real money is on the line, I still care. And that's normal. You don't change years of conditioning with one insight. You change it with structure. Not motivation, not willpower, structure. Most traders measure the wrong thing. They measure profit per trade, win or loss, account balance after each session. That keeps the mind emotionally reactive. Instead, you must change the scoreboard. Your new performance metrics are: did I follow my entry rules? Did I respect my stop loss? Did I manage risk exactly as planned? Did I stop trading when rules told me to stop? A winning trade with bad execution is a failure. A losing trade with perfect execution is a success. This shift is uncomfortable at first, because it removes emotional rewards, but it's the foundation of consistency. Here is a rule that professional traders live by. No conclusions before 20 trades. Not 1, not 5, not 10, 20. Why? Because below that, your brain will lie to you. Randomness dominates small samples. So instead of asking, how did I do today? Ask, how did I execute across my last 20 trades? This immediately reduces emotional swings. One loss doesn't matter. One win doesn't excite you. You are no longer reacting to noise. Most traders journal like this: entry, exit, profit or loss. That's incomplete. You must journal behavior. After each trade, write, did I hesitate? Did I feel fear or urgency? Did I want to interfere? Did I follow my rules even when uncomfortable? This turns trading into self-observation. You stop identifying with outcomes and start observing patterns. And awareness is the beginning of control. Emotion is fastest when you're tired or tilted. So don't rely on judgment, rely on rules. Examples.
Max 2 losses per day, stop trading. After a big loss, stop. Take 15-minute break. After 3 trades, mandatory pause.
These rules protect you from your future self. The version of you who is emotional should never be in charge. Most traders think progress means bigger wins, higher win rate, faster growth. That's not progress. Real progress looks like losses don't affect your mood. You stop forcing trades. You feel calm during execution. You follow rules automatically. When trading becomes boring, you are getting close. Excitement is a sign of emotional attachment. Boredom is a sign of mastery. Finally, you must change how you see yourself. Stop saying, I'm trying to make money trading. Start saying, I'm a process-driven trader. Your identity should be someone who executes rules, someone who manages risk, someone who accepts losses. Money is a byproduct. Consistency is the goal. When you stop caring about individual trades, you don't become careless. You become precise, detached, calm, objective. That is not emotional suppression. That is professionalism. Let me leave you with this thought. The market does not care about you. It does not care how smart you are, how hard you try, how badly you want to win. And once you truly accept that something inside you relaxes, because you stop fighting the market, you stop demanding certainty from an environment that was never meant to give it. Most traders spend years trying to eliminate losses. Professional traders accept losses as part of the structure. They don't ask, how do I avoid losing trades? They ask, how do I behave consistently when losses inevitably happen? That is the real question. The day you stop caring about individual trades is not the day you stop caring about trading. It's the day you stop personalizing randomness. You stop letting the market judge your worth. You stop tying your confidence to outcomes. You stop letting one trade decide your emotional state. And in that space, discipline becomes natural. You will still have losing streaks. You will still feel uncertainty. You will still feel the urge to interfere. But now those urges no longer control your actions. You see them, you acknowledge them, and you let them pass. That is emotional maturity. Professional trading is not about prediction. It is about execution without emotional interference. It is about showing up the same way on winning days, on losing days, on boring days. Because consistency is built when emotion is no longer in charge. So if you take one thing from this video, let it be this. Your job is not to win trades. Your job is to execute your process with discipline and neutrality. Everything else is noise. If this message resonated with you, take a moment after this video ends, not to look at charts, not to review your last trade, but to reflect on how you think. Because in trading, the real edge is not on the screen. It's in the mind behind it. That's where the winner's mindset begins.